Good afternoon, this is Todd Colvin coming to you from the floor of the CME Group. We are looking at energy and oil prices. Take it on the chin again today. Another decline. If you go back to last week, we hit the year-to-date high in the September contract, and now we're about $5 lower. And while a lot of the talk on the initial leg down was more about trade wars and the effect it would have, I think, rippling affecting on the global economy, now we're talking about perhaps the release of reserves or the potential for a slowdown that may be, re-tinkering the global GDP itself, which would be one of the reasons why we'd see a slowdown in oil prices. So right now we neared that 100-day moving average, something we haven't done in about a month. We're about $1 away from it, so it's well within striking distance, and that would certainly be a key level if we got through it to the downside. We haven't yet. Today we got just below $67 a barrel, another dollar lower, and we could see some things really start to take off. And if you look at the dollar, well, the dollar's been also coming off a bit, so this is one of those interesting trades when we talk about dollar strength and commodity prices coming off. That hasn't been one of the relationships we've seen with oil. Obviously, the dollar's been rallying very strong since April. Well, oil's been rallying very strong as well for separate reasons, not dollar reasons. More of a supply reason, more of a global demand reason, more of a global economic engine reason. But the dollar has certainly not been holding back oil prices. As I've recently said, we just hit year-to-date highs, and the dollar's been very strong. But now in the dollar pullback, we're seeing oil pullback. So again, they're not working the way they historically have. So right now it's going to probably come down to the fact that global demand may be on the wane, or at least maybe coming off a little bit. And if that happens, that will certainly hurt oil prices regardless of what the dollar does. So right now that relationship seems to be a little bit gray. And if you look at the speculators, speculators have been ramping up their longs going back to the middle of May, and they started to maybe seeing a turn here as oil prices turn. Last Friday's numbers showed us just a modest trim, maybe trimming some of those longs, but I think as the oil prices get closer to that 100-day moving average, speculators will get rid of more of their longs, which I think will exaggerate the trade. So right now, speculators may be the ones that will be pushing this market down, again, regardless of what the dollar's been doing. So oil prices trending lower, not seeing any stop or any shortage of that move in the near future, at least until we get to the 100-day moving average. And if we bust through that, it could be wide open for lower prices. This is Todd Colvin coming to you from the floor of the CME Group.